It was a day that started like no other, but then a reversal of fortune. Stocks surged out of the gate at the opening bell, piercing through 26,000. It seemed like the rally was entering a new phase, but then a turn and then a collapse. The rally was no more. The indexes turned negative. And when the closing bell rang, the Dow swung nearly 400 points in total, its biggest reversal in nearly 2 years. At the close, the Dow Jones Industrial Average fell 10 points to 25,792. The Nasdaq was off 37 and the S&P 500 dropped 9. The wild day was a head-scratcher. So Bob Pisani watched the action from the New York Stock Exchange and explains what happened.
It was a roller coaster ride for the markets, with the Dow opening at a new record of 26,000, but shortly after that milestone, with the Dow up 283 points in the middle of the morning, investors just seemed to lose interest, and the markets drifted lower into the afternoon, with the Dow ending fractionally negative. What happened? Well, some brought up fears of government shutdown later on, but for most traders, the markets had reached such lofty levels that it was just logical to take profits. And you can't blame them for feeling this way. Much of the initial rally was fueled by earnings optimism, that was real, and tax cuts, and that was very real. But it's already led to a handful of companies raising their full year estimates. There's also a little bit of this FOMO going on, fear of missing out on the rally. So we saw exchange-traded funds with very strong inflows in the last week, and I mean into everything, into the U.S. stock market, into the European stock market, into emerging market stocks, into everything. And remember that old trader saw, when everybody wants in, traders get a little bit nervous. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.